Welcome to the weekly market analysis. This segment will explore the performance of Indian equity markets during the trading week of August 18 to 22nd, 2025. After a 6-week losing streak, the market showed strong upward momentum for most of the week, driven by positive reforms and an S&P credit rating upgrade. However, the week ended with a significant correction on Friday. We'll delve into the key drivers of this market movements, analyze sectoral performances, and provide insights into what traders and investors should consider moving forward. The Indian stock market had a strong run for the most of the week, with the Sensex surpassing the 82,000 mark. However, a sharp correction on Friday erased some of the gains. The Sensex ended the week at a 0.36% loss, closing at 81,306.85. The Nifty 50 also saw a modest decrease of 0.29%, finishing at 24,870.1. The broader markets, in contrast, showed resilience throughout the week. The mid-cap index saw a gain of 2%, led by stocks like Ola Electric Mobility, while the small-cap index added more than 2%, with Foesco India and KIOCL as top gainers. Several factors influenced investor sentiment this past week. On the positive side, a rating upgrade by S&P Global, citing India's robust economic growth and fiscal commitment, boosted market confidence. The rally was also fueled by plans for big bang reforms in the GST regime, expected to spur consumption. Furthermore, falling consumer and wholesale inflation data at 1.55% and minus 0.58% respectively raised hopes for potential RBI rate cut in October. On the negative side, uncertainty lingered over the potential US tariffs on Indian goods, with a deadline set for August 27th. The week ended with a heavy profit taking, particularly in market heavyweights like HDFC Bank and Reliance Industries. Foreign institutional investors were net sellers for the eighth consecutive week throughout, at a lower pace, offloading 1,559 crore rupees in equities. However, domestic institutional investors extended their buying streak for the 18th consecutive week, providing strong support by purchasing 10,388 crore equities. Sectoral performances reflected a rotation of investor interest. The auto and pharma sectors were among the top performers, with the PSE Auto Index rising 5% and Nifty Pharma Index adding 1.26%. Auto stocks surged on expectations of demand revival and GST rationalization. The metals and bank sectors also closed higher for the week. Conversely, the aerospace and defense and insurance were among the lagging sectors, down 0.37% and 0.30% respectively. Profit booking was visible in banking counters on Friday, which weighed down the overall market. Specific top gainers included Maruti Suzuki and Vadi Energies, while top losers included HDFC Bank and Reliance Industries. From a technical standpoint, the market exhibited corrective consolidation after recent declines. Nifty 50 faced key support at 24,594 and resistance near 24,671, with bullish momentum dependent on reclaiming 24,747. Technical indicators signaled continued bearishness, with the RSI slipping below 50, but oversold readings could trigger relief bounces. Experts noted that the market remained in a wait and watch mode, with global risks, US tariffs, and US Fed's policies stance at the upcoming Jackson Hole's symposium influencing direction. The market's path will be determined by how the global risk evolve and by the strength of forthcoming domestic data, especially Q2 GDP numbers. This analysis is based on information available as of August 22nd, 2025, and the market conditions are subject to rapid change. Investors are advised to consult with a qualified financial advisor before making any investment decision. Thank you for joining us for this week in-depth market update. Stay informed, stay cautious, and we will be back next week to continue our analysis of the market movements.